Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, August 31st, 2021. The S&P did manage to go up during the globex session rather nicely, a nice rally, up to an additional new high at 4542.25. That was just shy of some resistance that we had just above those levels. Now, I have gone ahead and put some labeling on what I believe could be or could have occurred. But before I go too far, let me just pull this back out to the hourly chart, and then we can see that if indeed this does put the 5 in, it did slip above the 1.382, and that is okay because we had our next level up at 45, I believe it was 65. Or 55, right up in that area, which would be 1.618. And that was allowable in terms of this being an irregular B wave. Now, the fact that the market may still have continued upside to do is going to bring about a situation where I will review whether this did mark the completion of those advancing sequences. And this is actually the beginning stages, including a new all-time high of a turnaround and drop back down. So that, and keeping in that in mind, this would be the A wave, this would be an irregular B wave, and then we would have a crushing C wave. Now, what's going to give us that clue? That it actually turns into that it actually the market stops forcing its way higher. Now, let me go back down to that 30-minute chart and finds the sellers, and we start to really slide below all of these levels. Now, so what I think we may have done, I mean, it was a fairly solid, this is on a 30-minute chart, a fairly solid decline all overnight in globex, and got itself down right at our opening to session lows at 45.12. Now, what it could possibly be is we're looking to count, if this indeed is the top, I'm looking for this continuation of a major slide in a C wave. So if I had to count that C wave, I could count wave 1, wave 2, this would be wave 1, and now we're doing a wave 2. Now, if that's the case, let me just put in some Fibonacci's that it would have to adhere to, not totally, but let me explain why as soon as I get this up there. Second waves can retrace almost all of that first wave. So they could still be bullish. And I mean, this could just be buy on the dip. And that's what happens. This right now is pretty much a 3-wave. You can see an A, a B, and now we're getting a C. Here is 618. Here is 70% of that initial wave down. And so I have to allow for it to go to 45.31, we'll call it, and 45.33. It could actually go back and equal the high. It just cannot exceed it. If it exceeds the high, then this is not a wave 1 and this is not a wave 2. Then I'd have to rethink what this is and consider that we are going to go back up and start continuing to move to new highs. If that occurs, that will put me into a position where I will have to consider the previous count and re-examine it to see where there could be extensions, where there could be a change up in the degree, because this is starting to get a little bit too granular, even for me, because of the size of the move. So, but I'm going to leave it at this for right now. Let's see what the market wants to tell us. That's always my case, is that the market will tell me what it is doing and where it intends to go. So allowing that, if I'm going to count this as wave 1, let's see if we can get this in a wave 2. Now, if those levels hold and turn the market lower again, then indeed, I am looking for this thing to begin to slide. It would be sliding in a 3rd wave. And regardless if it's a 3rd wave of a C wave or just a 3rd wave of a 3rd wave, that's the longest and the strongest portion of a 5-wave sequence. So that's where we would be into a third wave. And I'd be looking for it to extend and just start to break down. Now, again, we have basically a no break zone. It likely can break it and still, move to all-time highs if I wanted to. But I'm looking at 44.84 to give me additional confirmation that the previous mark that I put in, the labeling I put in, is holding out. This did turn into a B wave, and now we're working through a C wave, which will come back down and go below 44.62. In fact, if it indeed is a C wave, I'm looking for it to come back all the way down below this at 43.46. So it needs to really, that's how badly I'm saying this thing needs to start to accelerate lower. Failure to do so would really put into question what all of this is, and that as well. Not an impossibility, because we continue to trade what's in front of us. And so far, we're continuing to count 5 waves up, which tells us we should get an ABC down. And so we'll take it piece by piece. So it doesn't necessarily change our day-to-day trading habit, because we trade what's in front of us, we trade according to the moving averages, and we have an idea of what we can put limitations around or parameters around for a particular move. And we also have what we can do if it breaks those parameters. We know then what our next levels should be. Now, here we have continued, if it wants to rally, we've still got 1.618 up here. Yes, there it was at 45.53. And I've got resistance up to 45.60. And that would just be nothing more than just this continuation, an extension of this whole thing. So here's how I'm going to leave it for today. If we get up into this zone and the market turns, then I'm looking for it to drop, and I'm looking for it to accelerate, and I'm looking for it to start breaking down below all of our moving averages thus far. Everything will be in alignment in terms of they'll all be pointing down, and the sellers will be as relentless as the buyers were yesterday and overnight, because they're all bailing, they're all turning. Now, in terms of information, in terms of financial information coming out, today we had consumer confidence. It was the lowest it had been. So, consumer confidence is falling and didn't seem to bother the market too much at all. Tomorrow we have ISM manufacturing. That's going to give us a little bit cleaner look into what's happening on the manufacturing sectors. That can be a market mover because, of course, it affects all of the component companies. Then we have on Thursday, we have jobless claims and international trade in goods and services. That gives us some additional clues. And then the final one for this week comes on Friday, and that is the employment situation. And that's just telling us what really August did look like in terms of employment and unemployment. And that's going to give stronger clues as to when the Fed will actually begin to taper. They've already said we're looking like we might have to taper beginning this year. Okay, well, now we're into September. So that leaves you right now. Now we're getting ready to complete the third quarter and move into the fourth. What do you say, guys? What are we doing here? So we'll wait and see what the market tells us to do. We've got our marching orders in terms of upside, and we know what we're going to be looking for. If this thing starts to break, I would expect it to drop pretty dang quickly, because we're getting additional confirmation that upside might be over. So we're going to start to see more people jumping ship and getting out. Now, in terms of individual stocks inside this S&P that are having an effect on it right now, we have people moving into Amazon based on some new reporting services they're going to start to produce and put within an app. Everyone's jumping on board that, but Amazon's just kind of had been favored yesterday and now again today. So, and pulling that up along with it, Google will get pulled up along with it. So we have stocks that'll move along with it, but that's putting some upside pressure on the bears, basically. So I'm going to leave it right there. Let's continue to allow the market to tell us. And our next update will be Wednesday, September 1st.